We all know that it's important to make good investments, and that's why we appreciate Mike Giordano. But it's also helpful just to have a plan for the taxes on those financial investments. Mike Giordano, financial advisor with Williams Wealth Management, joins us now to talk about the savings that are up for grabs. And Mike, taxes, they can be complicated. So let's start with just kind of the basics, the different types of investments accounts and how they're taxed differently.
Yeah, absolutely. I mean, one of the biggest misconceptions I get from investors is they say, oh, what account should I put my money in that will make me the most amount of money? And I go, well, it depends. You can basically have the same kinds of investments in all different types of accounts. So it really matters the types of investments you have in those accounts. And that is the most important thing. The second most important thing, though, is how are those accounts taxed? And different ones give you tax advantages today, other ones give you tax advantages in the future, and some just give you a lower tax rate.
So, I mean, tax advantages is money in the bank.
Right.
So we don't
absolutely.
want to, we want to make sure we pay attention to that. Is it important that we have different kinds of accounts that we want to pay special attention to?
Absolutely. Yeah. I mean, this is the key thing here. Is you're looking at, when you're trying to construct a portfolio, you want to be right at the intersection of flexibility and tax advantages. And so there's three big buckets here. You can get tax breaks today in some accounts. Other accounts give you tax breaks in the future. And then, as I mentioned, there's that third bucket that gives you those reduced tax rates. If you get a blend of those three buckets, now all of a sudden you've given yourself the flexibility and the tax advantages.
And does that depend on what point you are in life? Like if you're younger, you're looking at some of these. If you're older, closer to retirement, you're looking at other ones?
Yeah, stage of life matters. It also matters what your income looks like. W-2 regular employees, they basically have typically similar levels of income every year. But if you're a business owner, your income can fluctuate drastically. And so there's so many different moves to make, and they're moves that you need to make on a yearly basis.
Okay, which ones do we need to pay special attention to?
Yeah, special attention on any of those tax liability, the future tax liability ones. So you're looking at like brokerage accounts, traditional IRAs, or 401ks, or 403bs. All of those are going to be taxes that you're going to face in the future. HSA accounts have a whole bunch of different levels of flexibility.
Those are health savings accounts.
Yeah, health savings accounts have all kinds of different levels of flexibility. So if you use those properly, you might be able to shield some taxes, but they're not really great accounts that you want to inherit. And then the inherited IRA, there's special rules around that. So even if you don't need the money, you might be forced by the government to take the money out quicker.
And real quick, a couple of those.
Yeah.
Employers offer HSA and 401k. Does everybody take advantage of those, or only at a certain income?
Well, taxes is a very specific thing. So the tax advantages are good, regardless of when you get them today or in the future. But how you want to take everything and how you want to mix everything around is the key. You don't want necessarily all your money in one tax bucket, because then you're going to be forced to take it all out at the same time. What you have to think about here is that Uncle Sam is your partner. And he's your business partner. So as your money's floating up, Uncle Sam is making more money too, and he's going to take that more money. So he's not the fun uncle. So what you're trying to figure out is how can I, work Uncle Sam legally in order to get the most amount of tax savings. And when we're talking about tax savings, we're talking about tens to hundreds of thousands of dollars difference here.
Real money.
Absolutely.
Mike Giordano, financial planner with Williams Wealth Management. Thank you. We always appreciate our Mike on the money.